Hi everyone, this is Kelvin from Properfit Property. Today we'll be looking at a popular topic. How do we spot undervalued properties that are still having the old price tag? Ready, set, go. With the pandemic situation causing delay for completion of developments, rising costs in construction labours and materials, and the need for more space for many who are working from homes now, these numerous events have put a huge stress on both the people and the property market of Singapore. Adding on the scarcity of land in Singapore, developers have no choice but to bid aggressively in order to secure lands for their future developments. This is evident when lands in Ang Mo Kio and Lentor Central was bid at record prices, with the developers' break-even price set at an estimate of 1,008 and 1,009 PSF respectively. So in order for developers to be making profits by selling off their units, it would be safe to say that units will be costing more than 2,000 PSF here in the future. And for those who have no idea where are these two locations, it is within the OCR, which is outside of the core central region. Two other plots of land in Slim Barracks Rise, which is in the RCR, was also acquired by developers above 1,002 PSF. With the break-even price just under 2,000 PSF, by factoring the developer's profit margin, units will definitely have to be sold north of 2,000 PSF. Having knowledge of the new price tag for properties moving forward, how can we use this information to help us spot properties that are still currently having the old price tag? Looking at past performances for a project in CCR named Lincoln Suites, we are able to identify the majority of the highest profit-making units here are the bigger units like the 3 and 4 bedrooms. With this trend identified, we can look at another project within close proximity, which is Copper at Newton in the same district. With a variety of 1 to 5 bedroom units, it currently has more than 60% of its units sold. As such, we should be expecting the developer to increase prices for all the other remaining units, right? Let us look at the charts of the prices since the beginning. Looking at the 1 and 2 bedroom units, we can see an increment of 8% to 16% respectively, with an average prices increasing by 200 and 350 PSF today. Whereas for the bigger units here, there is only a slight increase in prices of 150 PSF and lower. With an entry price of 2.45 million for a remaining 3-bedroom deluxe unit here, there are similar units priced higher, close to 2.6 million, that has already been transacted. As such, there is a safety net of 150,000 if a buyer were to choose to purchase a unit here. With the knowledge of the future selling prices for units in Slim Barracks Rise being above 2,000 PSF, it brings us to this mega development named Momentum Park that is also in the RCR as an comparison. With a total of 1,862 units, this project is currently 83% sold out, with 300 units remaining as of today. The same trend can be identified here when we look at the price charts. As for the 1 and 2 bedroom units, there is an increment of 9% to 10% to the price, while the 3 and 4 bedroom units only had a slight increment below $70 PSF. With an entry price of 1.7 million for a 3-bedroom unit available here, it will be one of the lowest priced units when compared to other similar units that have already been transacted. So from these two examples, we can see that as more units start getting sold, developers will tend to start increasing the price for remaining units. So when is it considered too high beyond its perceived value, or a price that is still reasonably acceptable? Let me explain further using units of the same stack in Forest Woods in District 19 as an example. Looking at the chart, being able to secure the 9th floor unit at 1.27 million here first would have been the best case scenario. Just by selling at the price of what the 4th floor unit was bought at in the future, would secure a profit of 270,000. While if you were a buyer considering to purchase at this moment, you may wish to avoid purchasing at this point of time, as it may put you in a risky position with lesser potential for capital gain. Unfortunately, not everyone is able to secure units at the very first stage. The next better option would be to secure units where prices are still within early stages prior to huge price increments. With this knowledge, the 3 important factors to consider for choosing the right development is to understand the current pricing stage for the development, the number of remaining available units and their prices, and the past performance for neighbouring projects and the future selling prices nearby. These are the factors I personally use to analyze each and every project for my clients before any of my recommendations. That's all I have for you today. I hope you have benefited from the information I shared earlier. If there are any doubts or questions, or any project you wish to know more of, feel free to reach out to me. If you are yet to subscribe, please help to like, share and click on the subscribe button below. With that, I'll see you on my next video. Till then, take care and stay safe.